This is Mitch, and welcome to the 1000houses.com podcast. I have Sam Wilson with us today, and we're going to be talking about how you really get free in this business. You know, we talk about freedom. We talk about being able to sit on the beach with an umbrella in our fruity drink. But, if we don't get carried, if we don't be careful, we'll get trapped, and we'll get trapped in a hamster wheel. I've done it before. I continually, as an entrepreneur, have to remind myself not to do it again. And, you can set up systems and get out of just about anything, or you can just invest in different kind of strategy, and there's no hamster wheel really to avoid. So that's what we're going to be talking to Sam about today. How you doing, Sam?
I'm great, Mitch. How about yourself?
I'm doing well. I got bamboozled. I'm stuck out at my ranch. So I got my cowboy hat on, and, I got my deer head over here, and I hope PETA doesn't call me or anything, because I'll invite them over to show them where there's many more where that came from.
Right. Yeah. Well, hey, lucky you. You're out of the range. That's a good place to be. Now you're a Texas rancher, right?
Yes. Right now it's so hot. It was 98 degrees and 47% humidity. You just walk outside and you'd get drenched. So it's not that fun this time of year, but the problem is there's still ongoing work that needs to be done. So you got to keep up with it.
Right. Yeah. That's one of the drawbacks to owning land, man. You got to manage it.
Yeah. But luckily, I see that as my cathartic work. It's like mowing the senderos with my tractor and all that stuff. It's work. Yeah. But it's cathartic. It has, you get to finish at the end of the day and look back and go, look what I did. It's beautiful.
Right. And there's very few things if you ride the desk like a lot of us do in the real estate investment world. There's very few things where you get tangible results right away. And so I understand that. You get out, you're like, oh, hey, look at that. It's done. It's pretty. It's clean. I've done something today.
Yeah, and I started this morning and I'm done this evening. So, that doesn't happen in real estate that much. So Give us a little bit of your background for those who don't already know. I've interviewed Sam before, and I think he's even interviewed me before, but you always gotta catch people, because there might be new people on the line. So give us a little bit of your background.
Sure. Yeah. I've got a diverse business background. I've owned several different companies and, backgrounds in the trades, the food service, the laundry business, you name it, just a variety of assets. I'm the term serial entrepreneur. Somewhat sticks, but more like ADD, and I can't seem to stay focused on one thing long enough. Once I figure it out, I get bored, so I've got to move on to something else. And we still own some of those businesses, and it's fine and great. But I'm always looking for new challenges. So real estate came my way after the sale of one of those companies, and got involved in real estate, and that was in 2013. Did a ton of fix and flip, did a ton of, lease option, did a ton of, owner finance properties, really just figured out the single family side of things, then got involved in passive investments, then got involved in parking lots and parking garages, which we covered extensively, I think, on your last show. And then from that point forward, we've started really investing in more self-storage and multifamily, and doing some development deals, and really just what deals make sense. And so we've aligned ourselves with industry partners I've known for years and invested personally with, and really just have become part of their team or their teams in the asset classes they specialize in. So that's kind of who I am and what I do now. I don't know if that makes sense or not, but that's a summary of what my day holds.
Work your way up through the ranks. So tell me what's hot now. What are you doing now?
Self-storage is hot. It's been hot for a while. The money pouring into that, both on the institutional side. I think Blackstone just poured a ton in. Bill Gates just bought a ton of it. But it also, it's also just it is a more recession-resistant asset class. But even further refined inside of that niche, I think boat and RV storage is even more of an asset, or even hotter. Boat and RV deliveries were up like 25, 30% last year, and are projected to do that yet again in 2021. which tells me one of two things. If we have a recession, look out for lots of sales and lots of opportunity to buy distressed assets. So if you're looking to buy an RV, I wouldn't do it in 2021. You might wait until 22 or 23 when we have a correction, and then you could probably pick up a note for pretty cheap and harvest someone else's equity they put in the deal. But that's an aside. So boat and RV storage with all those extra deliveries, people need to have a place to put these. They've got to have a place to store. Most HOAs aren't allowing it. You're not gonna be able to store it in city limits. You're not putting it in your neighborhoods. So if you've got a giant RV, where are you going to park it? You're not going to park it. I mean, you might park it out in the Texas sun, but you know how those roofs perform after 9 months sitting in the Texas heat. It's just not a good place to put it. So if you're going to put a large, and those things aren't cheap anymore. They're not $30,000. They're a lot more than they used to be. So you know, people need places to store their stuff, and so I see that niche.
I just had one pull up on my ranch. You know, a guy came over to see me, and he was going to stay a couple of days. And come to find out, he didn't need a room or anything because he pulled up in a $1.5 million coach. You know what I mean? Like, holy cow! You know, and I don't know if people know. Well, I mean, a lot of people know, but I have taken my one-time cash events like wholesaling or fix and flip, and my temporary cash events like seller financing and toting the note after they give me a down payment, and I roll all the money I make from those into storage facilities. That's my forever cash play. That's how I'm going to work myself out of a job. Is I'm going to buy enough storage facilities and hire a few managers so that I don't have to, you know, be in the daily grind at all. And you still got to watch over it, but so I have about 14 facilities, about 1,300 doors and counting. And, you know, everybody owes me about $100 a month. So you can do the math, 1,300 times $100 a month. So, you know, I don't, 130,000 a month. I don't get to keep it all because I got insurance and the grass needs to be mowed some places. And, you know, you got to fix a gate and a door and electric bill and you got some managers and stuff, but I mean, you still get to keep a whole bunch of it. And you know, how much do you really need to live?
Right. That's exactly right. And that's one of the other beautiful parts. I mean, and as we look at the, just where we're going government wise, which we can, don't get me started there, but you know, if you look at multifamily or you look at some of the, and I still think multifamily has its merits. I don't think it's going anywhere, but I do think that you're going to run into a lot more red tape and a lot more restrictions around what landlords can do. And so you've got several risks. You don't just have economic risk or market risk, but you've also got governmental risk. And so if we have another giant, you know, deal where the next administration decides that all landlords are evil and that none of them can evict anyone ever, and by the way, you still owe your note, like they're not picking up the balance if you can't pay your note. It's one of those things where you want to take some of that risk off the table. That's why I like self-storage as well. I mean, there's just not the eviction moratoriums around your crap. Like if you don't pay, your stuff goes on the street in 30 days. It's fast, it's quick, it's easy. So
let's talk about the natural evolution though. Like, so I started out, you know, with 15 little boat storages with dirt floors and chicken wire fence dividers, corrugated aluminum, rusty at that, you know, because they had been there for 15 years before I bought them. Guy passed away. State doesn't want them. I bought them for, I don't remember, $6,000 or $8,000. It's 15 little, to park your John boat, your little fishing boat, right? Because that's what boats were 27 years ago. There weren't as many huge boats as there are now.
Right.
And I kind of opened my eyes like, wow, this is a pretty cool form of cash flow because there's no carpet and hot water heaters. And, you know, and if they don't pay me, I capture their boat, which to a lot of men is more important than their wives, you know. I mean, you know, they might give up their wife, but they're not giving up their boat. You know what I mean? So, so I started there and realized that, you know, I really started to appreciate, even though it was a tiny amount of money, but I started to appreciate the dynamics of that business. And I thought, well, how do you grow this? And so I started buying all the mom and pops around the lake. I sent a letter to every one of them every 6 months. I had a stack of letters to go out. And I knew that if every 6 months I had to do it, I wouldn't do it. So I spent one a couple of days one time, and I got a stack ready to go every 6 months for 6 years. And then I put them in a closet with it. They were all wrapped up in twine. And all I had to do every 6 months was grab a bundle with the twine around it and go to the post office and let go of it, you know?
Wow.
And then I actually bought 15 of them. But they were all 18 units, 25 units, you know, but that's where I could play. And those people would seller finance me. Once I figured out what are you going to do with the money, and I had a conversation with them, they would all seller finance me the balance, whatever, you know, I work out a down payment. Almost every single time, the old man would die, and the old woman that was left over wanted nothing to do with those things that occupied all of her husband's time. Now, was the husband really working, or was he just using those storages as an excuse? I'm going to say he was probably using them as an excuse, because my experience is they don't take that much time. You know what I mean? No. So I accumulated all these little places. And then as I started to come of age and the numbers were rolling in every month, I would either add on, or a lot of them I had to tear down and rebuild to the new boat.
Oh, wow.
You know, the new boat now has ski racks. It's on a trailer. You got to have 12 foot to even get a boat in a stall now.
Correct.
And then the trucks got longer. The boats are now worth 150,000, 200,000. And those boat people are not going to let you take their boat. They probably have a mortgage. And so if you lock their boat up for non-payment and threaten to foreclose, the bank will come in and make the payment so they can seize their assets. So they have a backup payer in the bank if they finance their boat. And, you know, I just kind of grew it, you know, like last week I built it. I mean, last year I opened up out of the ground, I built out of the ground a $2.8 million, 283 unit traditional drive-through in your truck storage facility, you know, but we didn't start there overnight, right? So what was your evolution like?
You know, for me, it's been mostly on the passive side. So one of the things, just learning the business, and this is how I've actually learned a lot of the different asset classes I've invested in. I've come in as a passive investor and really got to know all the syndicators and learned what they are doing and how they're doing it. And so for us, you know, everything I've done has been on the passive side and or on the capital raise side for other lead sponsors. So I've not yet actually taken down a deal as a lead sponsor. I say that, except we just bought 70 acres and we're developing a portion of that into boat and RV storage on the active side. But that's still raw ground and is just now getting the groundwork laid for a 216 unit facility that we're building. I'm limited in experience on that side of things, but we were just rather talking about things where I see opportunity, and that's certainly one of them.
Well, I just opened a semi-truck parking place on a major highway, 12 acres, and I got under contract 7 acres for a boat and RV, for an RV parking storage, RV storage parking. Right. But the reason why I like this piece of land so much is it has 2 RV dealerships right in front of it. Like you got to drive between them to get to my acres where I'm going to offer for you to store your home. And I figure they're going to fill me up.
Yeah, more than likely. More than likely, if they're local buyers, then yes, absolutely. I
mean, it's a little town right outside of a big town, San Antonio, 2 million plus people. But, you know, they're selling hordes of these things a month, you know, like crazy, stupid, you know. So I actually had to sneak in and buy that land before those 2 people knew about it, because they wanted to expand, you know.
Good for you. Anyway. Yeah, I see upside in the boat and RV storage. You know, I also see upside in RV parks. I mean, I personally am an owner of an RV. I love my RV. My wife and I use it and now that we have 3 kids living with us, we use it all the time. But you know, for us, we're a little bit more on the road and movers. But for a lot of people, they need a place to park, or they want to go on vacation and somewhere out west. They're going to park at one RV park for 7 days and explore the area around them. So I see opportunity in RV parks as well. I've passively invested in RV parks, not actively, but I see that as a spillover to this as well. Storage and RV parks, I think all that goes hand in hand.
So talk to me about syndication, because it's one of the things I don't know very much about. I haven't ever done it. I haven't been involved in it. I might have been involved in it through, I mean, I know it's touched me because I've had to compete with those guys when they're out buying up the whole town, you know. But
Right.
you know, like Blackstone one time was like, my God, they bought everything, you know, like, you know.
Everything. Yeah. What do you want to know about syndication? It's I mean, you know, it's a group investment. You know, obviously, your listeners may or may not be aware of how syndications work, but it's a group investment where you have limited partners and general partners, and the general partners raise the equity from the limited partners. Of course, they pile that or compile that with, you know, their debt sources, you know, from their lenders, and then they go out and buy assets, and they share in the profits. Generally, your limited partners take the share of the profits, and then your general partners, you know, get paid after your limited partners do. But
So they do the people that invest in those things or put money into those things, they have to be, what are they called, qualified, or they have to be a
two options. Yeah, the term you're looking for is an accredited investor.
yeah, accredited, yeah.
Right. Yeah. It depends on the terms of the offering. So you can raise raise money under a 506B regulation, which is you can have 35 sophisticated investors and an unlimited amount of accredited investors. But the restrictions that come around that is that everyone in your deal has to have an existing relationship with you. So it's somebody I have to know, have to have established it. If you're not an accredited investor, I've got you in my list. You and I have had phone calls. We've established relationships over a period of time before, and there's a holding period. You can't call me today if you're a sophisticated investor and invest in one of my live offerings. You just can't do it. There's a holding period of at least 30 days before you can actually get into one of our deals. So that's a 506B offering. 506C offerings, I always remember accredited ACC. I take the C and remember that that's accredited. So 506C offerings are for accredited investors. And you could call me today. You're an accredited investor. You saw something. I've advertised it on Facebook, LinkedIn, all over the internet. Hey man, I want to put 100 grand in that deal. Great. Come on. You have to prove that you're accredited. So there's several different ways to do that. And there's a process. It is, you know, administratively moderately burdensome, but it's not as bad as people think. And there's ways of making it easier. But once you get the piece of paper signed off by your accountant, CPA, by your you know, broker, whoever it is, then, you know, off you go. And there's restrictions around what defines accredited, but you know, you could probably look up all those somewhere online and get the fine details on what that entails.
Yeah. So talk to us about your viewpoint on freedom. You like these because of freedom. Well, tell me what your freedom looks like, what you look for.
You're talking about time freedom, mind freedom. You know, there's lots of things. I guess as a kid growing up and having the only job I ever held was actually working for one of my once I became an adult, was working for my own brother until I was 25, and I have not worked for anybody else since. But you know, I remember when I was young, I would see these guys, and when I was working for him, I started working for him when I was 16. But you know, you'd go to work and you'd be driving the work van or something. You'd see these guys out there, you know, it's, you know, noon or 1 o'clock on a Tuesday afternoon, and they're out riding their bike or running. And I'm like, I wonder what those guys do. Like, how do they have time in the middle of the day? Like, it's a work day. It's Tuesday at 1, and you're out there in your little skinny tights riding your fast little bicycle you paid $10,000 for. Like, I really don't want to do that, but I want to have that flexibility you have, right? Like, I want to find out how you did that. And so for me, that's been one of the things I've always aimed for, is to be able to call my own shots and to define what it is I want to do with my time. Because time freedom, I mean, that time is your greatest single asset. You know, it's not money. It's not anything else. Without time, what are you going to do? You can be the richest man in the world with 1 second to live. And what good is it? Like, time is your greatest asset. So, you know, being able to free, like last week, you know, we said, hey, we're going to take the kids and go see my in-laws. It's Thursday morning. Okay, well, I cleared my schedule for the weekend and we're gone. We're gone for 4 days. Who did I ask? Nobody. And, you know, my wife, of course, because the kids all know who's the boss.
Yeah. You didn't need to get permission from somebody. That's one of the things I look for when I'm trying to, you know, I go through my students, and like, I don't want to take everybody. I want to take somebody I think I can really help. So one of the things I'm looking for, have you had enough of people telling you what you can wear, when you got to show up, what time you can leave, how long you can go on vacation, how much you can afford to pay on vacation, how much you can make? Have you had enough of all that? Because if you had enough of that, you know, then I think you have a little bit of that angst that it's going to take to get, to a different place.
100%. Yeah, absolutely. Absolutely. That's motivation. That is motivation to do something different. So yeah, yeah.
I've told a lot of people, says, you're not pissed off enough yet. Call me in a year. You got to be pissed. Like, I'm not doing the crap anymore. I'm pissed.
Well, if that didn't piss them off, I don't know what would. But there you go. You're just giving them the kick in the or the slap on the rear end of the horse to keep move a little faster. So
yeah. You got some giveaway stuff. Tell us what you got to give away here to the audience if they want to take part of it.
Yeah, absolutely. I think one of the things, if you're a passive investor, one of the things that is always frustrating is just vetting deals, right? Like, I know when I started out, like, you'd see all these deals that come across your desk from 20 different or 20 different sponsors, and you would get, you'd spend 2 hours looking at it, wondering, well, gosh, I wonder about this. Does this make sense? Is that a market I want to be in? Do I like the, all them? And by the time you've got 2 hours in, you're not quite sure. And then you see another one come across your desk. And so at the end of 20 deals, you've spent 40 hours and you still have no direction whatsoever. And so it got really frustrating. I spent a lot of time getting bogged down with no progress. So there's a checklist I have that you can download. It's called how to vet a deal in 10 minutes or less. And it's a free guide on our website. You can go to Bricken, Bricken, investmentgroup.com/checklist. And you can download that free guide, and it will really help you refine your criteria as to what it is you want to be investing in, either as an active or a passive investor. I use the guide even myself. It's something I put a lot of time into writing and thought into going, hey, how does this actually work? Because even so, there's still active investments that come across my desk. Do I want to buy this? Is this something we want to deal with? Let me look at it.
Yeah, so I'm going to make this easy. My listeners know how it goes. So I'm just going to go through 1000houses.com/Bricken, Bricken, and that'll get you over the show notes. Or you can use his link, whatever one you want. But my listeners are kind of used to the 1000houses.com / and a keyword. So we'll go keywords Bricken, Bricken. And if you want to learn how to size up an investment in 10 minutes, see if it's worth your time, go over there, 1000houses.com / Bricken, Bricken, and get your hands on it. It'll be a download. And, that sounds really interesting. I want to have that just to have it because, it sounds like that would be a problem for me to be looking at these syndication things and like, I don't know what to look for. I mean, how do I know these guys are telling me, what's right, what's wrong, what's good?
Yeah, it'll help you refine your criteria. That's for sure. That's probably the most useful. There's a second download on there where you can it's a guide to help you figure out how to quit your 9-to-5 by investing in real estate. And that also is an option there as well. I think that's Bricken Investment.
Okay, so how to quit your 9-to-5. That's really dear to my heart because like my podcast is all about helping people fire their boss or, quit their job because it frees up 2,600 hours to figure out who you're supposed to be and be what you're supposed to be to your family and to yourself in whatever, it's really hard to be all you're supposed to be when you're given 2,600 hours a year to a job, you know what I mean? Making someone else rich and letting them go all over the country, becoming bigger and better at what they do. So, we all need jobs. I'm not running jobs down. I'm not running bosses down. I am a boss, but I'm saying, at some point in some phase in everybody's life, they're like, it's time to go to the next level and this job's not working out, so.
That's absolutely right. That's absolutely right. So yeah, that should be in your show notes as well. That guide, there's a link. I shared that with you, so you can put that in there as well on the.
How to quit your 9-to-5.
Yep.
I say that people say to me all the time, we did the math and 40 hours a week times 50, that's not 2,600. It's less than that. I said, no, you got to be the kind of guy that has an 8-hour-a-day job, but goes and spends 10 or 12 because it's your name on the job. And that's the kind of guy that'll make it in this business. So if you're not that guy, don't quit your job yet.
Man, that's a fact. Yeah. Especially starting out, people think, oh man, isn't it great working for yourself? And it is. I wouldn't have it any other way. But it also comes with its own set of, caveats that if you're not prepared for that, they're very real.
So let's do the good and the bad. Let's start off with what was a syndication that maybe you didn't look at hard enough or didn't know the right things and didn't go the way you want. And how did it bite you or how bad was it? And then we'll go on to the other end of the spectrum.
Yeah, I'm fortunate and blessed at this point to say, Mitch, that every deal I have invested in has performed on the syndication side. I can tell you, I personally, and I always say this, if you ask somebody in a given business, and especially in real estate, tell me about a deal where you lost money, and they say I never have, then don't invest with that person. I'm just going to tell you.
Because yours is going to be the deal that does.
Bingo. Bingo. If that's the answer, then I won't invest with you. You got to tell me when you lost money. And so I can tell you personally, I've lost fistfuls of money. Good Lord. I mean, yeah, but this was all on the single family side, and it was all my own capital. So I took some bruises early on where I didn't do my due diligence well enough on the property. And you end up finding that, because you get to a point, especially when you're buying tons of houses, you say, okay, I'm not paying $500 a house to have some inspector go in there and turn on the faucets and say, oh yeah, the water runs and the water heater's old, by the way, thanks. So, and that worked out well, but it did bite me a couple of times. And, maybe I should have had those inspections done, because the times it bought me would have paid for all the inspections I didn't have done.
Yeah.
Yeah. And so that there it is right there. I mean, golly, I did that 2 or 3 times where it's like, oh my gosh, there's a 6-figure price tag attached to that, where we lost money. And
that makes that $500 inspection seem pretty cheap.
cheap, man. Absolutely cheap.
That's a lot of inspections.
Yeah. So that's it.
I'm not laughing at you. I'm laughing with you because I've had the same, you know what I mean?
Yeah.
I haven't lost on a ton, and thank goodness, the ones that I lost on, they didn't all happen in 1 month or 1 year, but and it usually happens. Tell me if this is why it happens with you. You get moving too fast and you don't slow down.
Yep. It's exactly
and
it.
Then you cut a corner. Because you're anxious to get to the closing or whatever. You're just, you're ready to do. That's the one thing I see about a lot of young investors. They're so anxious to make a deal that they'll just sign their name on damn near anything. I'm like, hold on, man. We're only signing if this thing makes money. So let's slow down and figure out. Let's run our traps. Figure out, why is this thing so cheap? It might be another reason. We need to figure out if there's some reason that they're not telling us.
Right. Yep, that's exactly right, and that's exactly when it's happened. Slow down because you're moving too fast, and that's when the mistakes happen. And I think earlier on, like you said, I was probably more of a deal junkie than I am now, where it was like, man, I want to get more deals in the pipeline, because the more we're doing, the more fun it is, the more fun I'm having, the more money we're making, and you can go. And at this point, I think I've refined that to where it's like, you got to sell me on why we're doing this, because there's a ton of stuff that comes across my desk right now, and very little of it makes it past 5 minutes of review. And that's me writing checks that I didn't ever need to write for mistakes speaking.
Yeah. So you don't offer any coaching, or you do offer coaching, or have you ever mentored anyone, or no?
I don't offer any. Yeah, that's just not where I am in the cycle of my business. We've got enough things going on, and we're launching enough initiatives right now that's just not something I really have the bandwidth for. Yeah.
Well, I mentioned it because I just want to make clear, like, you don't have anything to offer as far as selling anything. So that you're just here strictly for the content to give back to the community, which is a great thing. And I like it and I admire that. And you're even giving away some free stuff so people can help. But there's no funnel attached to this. So you know what I mean? So go ahead and get that free stuff over there, and don't expect for Sam to be calling you in the middle of the night trying to talk to you about anything, because he's not going to be calling you.
That's true. Always welcome to chat. If there's investors with questions, any asset class, happy to talk about it. Obviously happy to always talk about what it is that we do here at the Bricken Investment Group, and talk about the deals that we're investing in. But outside of that, and again, I won't pester you. It's free resources, and this is free content. So happy to help any way I can.
So how did the parking, I've always loved the parking business. I thought, the parking garage business, I see parking garages, where you got to pay to go in, everything. What a business that is, but how did they hold up in COVID? I imagine I could see where they might had a slowdown because people quit moving.
It got hammered. They got hammered, man. There's no other way to put it. We always said we liked parking because it's a fairly recession resistant asset class. It's not, I mean, nothing
This
is
wasn't a recession. This
except
wasn't a recession.
that I'm clarifying my comment here is that we said it's recession resistant, but it's not pandemic resistant. I mean, who's going to ball games? Who's going out to the bars on nights and weekends? Who's going to concerts? Who's going to, courthouses? Who's going to jail? I mean, your courthouse and jail lots are gold mines because they're there for an hour and then they pay $10 and they turn over and that lot turns over, 6 times before 2 p.m, a gold mine. But even that got weird. So yeah, the whole thing really just took it on the chin. And what we saw happen, and again, this is shifting. Obviously, as the country reopens, there's becoming more opportunity, and we'll go back into buy mode in that asset class. But what we saw happen was asset or net operating income just fell off a cliff, but yet asset prices remained the same because you still had people out there doing construction. Building really didn't slow down that much. And so, sellers still wanted, top prices. They were tough to underwrite. Those assets were difficult to underwrite pre-pandemic. In the pandemic, they were impossible. No bank was going to lend against an asset. Like, for instance, there was a deal in Houston we were trying to buy. We had offered them $3.7 million in February of 2020, based on, revenues. And then in March of 2021, we offered them 2.7, and even at 2.7 million, it wasn't even covering taxes. I mean, there was just the revenue was just gone. So we were still overpaying for something. So we were definitely being speculative land play on that deal. But that just kind of shows you where a lot of the assets have performed. And again, it's turning a corner, and I see great opportunities that are going to be coming our way in that asset class. But that's how it survived, or that's how it performed in the pandemic.
So, you never know. I mean, who would have thought of that? It was never even on anyone's radar, a pandemic. I mean, we planned for all kinds of things. It never showed up anywhere, as something you to even think about.
Nope.
So, hopefully, you survived or had enough money put away or whatever. That's one reason, I keep telling myself and my partners, like, don't get too many things running at one time. Let's get one or two, get them completed, get them up and running, get them humming, and then move on to the next. Because if this happens when you're completely spread too thin, if something like a pandemic happens, it could cost you everything that you worked for your whole life if you're not careful. So
that's correct.
I'm always, try to tell me that when I was 24, but now I'm 60. It's like, slow down there, boy. Don't be running so fast. You're going to stab yourself in the eye with a pencil. You're going to fall down. Like, I sound like an old man now sometimes. But anyways.
You might be, Mitch. You might be. I'm just kidding.
I might be, yeah. If my birth date says anything, I'm getting there fast. So you do things all over the country or just in a certain region, or you go wherever the deal is?
We go where the deal is, but I mean, at this point, passively, yes, I'll go anywhere if the deal pencils. Almost anywhere. It needs to be in states that still believe that you can, buy stuff and own it without too much interference. So passively, I'll go a lot more places than I will actively. Everything active that we have is really from Tennessee and east and southeast. So that's kind of what our buy area, geographic area looks like right now. So I hope that answers the question.
Yeah. All right. So what is your advice before maybe we wrap it up? What's your advice to some of the young entrepreneurs out there just trying to figure out how they're going to quit that JOB and how they're going to find their freedom?
Man, one is take whatever money you have and put it into income producing assets. A lot of people have made a lot of money in the last few years in the stock market, but I don't have a one red cent in that casino because I want to buy income producing assets. And I think the sooner you can wrap your head around the idea that that income producing assets is wealth, like buy those things, put your money in those things. And so that's it. One, find anything that can produce an income and then go buy it. And then reap the rewards from that for as long as you can and just keep compounding that. That's the fastest way out. Otherwise you end up, hoping and praying that, someday the stock market goes up, and there's just no fundamentals involved in that. So that would be it. I try to tell all my nieces and nephews and everybody else in their early 20s, like, guys, go buy rental property, go buy something, go buy anything that's gonna, and I've got businesses right now that throw off a very, very healthy income streams. And I'm not really involved in it. It's an income that produces, or an asset that produces an income. So that's it. Look for that and put your time and effort into creating that stream of income.
I remember reading Kiyosaki just defining, what an asset is. An asset is something that brings in more money than it costs every month. And that all of a sudden your banker's application for a loan makes no sense. List of assets, boat, car, house. I mean, they're not making me any money, but they're all under the asset column. So we've been trained kind of wrong from the beginning. So it's real simple. The asset that you want makes more money than it costs every day. I don't care what anyone else calls it, right? It has to produce more than it costs every month, so go find that stuff to buy. If I'd have started at 20 or 21 or 22, even 25, I didn't really find my butt with both hands till I was 34. When I had enough, and then I started reading and, trying to figure out, starting at age 34, like, how come they're doing all that and I'm not? And, trying to put one and one together. And that was one of my first decisions. I'm not buying crap anymore. I'm only buying assets. I don't care until I can get enough to have some fun. I'm not buying anything but assets. I don't care if it's fun or not fun. I'm not buying anything else.
Right. So, bingo. That's exactly right.
Yeah. My friends were buying boats and motorcycles and everything. I'm like, I bought this little acre over here, that doesn't sound fun at all. I said, well, it's not.
That's exactly right. That's exactly right.
All right, my friend, I appreciate you. I want you to stop by and learn how to analyze an investment deal in 10 minutes, a little free booklet, or you can go over there and learn how to escape your JOB. There's another free little booklet over there. Just go to 1000houses.com/Bricken, Bricken. It's right above his head right there. And check it out. This is Mitch Stephen with 1000houses.com. I would like to thank everybody for stopping by to get you some Sam Walton, and I appreciate everything you've been doing, and I appreciate you being on the show, and I like being on your show sometimes, so we'll keep it up, check in with each other every now and then. When we come around next time, I want to show some people some new things that I'm into. Not time to talk about it today, but when they have these big booms in these economies, I always find you got to take a left turn out of the herd somewhere, and I'm trying to find where it is, and I figured out where it was for me this year. We'll talk about that sometime. So, Sam Wilson, my pleasure. I appreciate you very much for being on. We'll talk to you soon.
Thanks, Mitch. Appreciate it.